trigger which will give you a laser beam.
Evening, everyone. Thanks for coming out tonight. I appreciate your time. Mark highlighted some interesting points about how do we differentiate ourselves, and being in a small cap listed company, we've had to endure some major changes over the last 12 months, having come out the back of a blowout. I took over running the company in October last year, and what we've been focusing on is conventional plays, big prospects with high IPs and large well reserves, strong 3D prospects with good analogues. Prospects are selected based on the quality of the 3D and the interpretation analog data provided to us by their generators. The engineering, how complex are the wells, how much risk is associated, how do we reduce that risk? All of our opportunities are coming through from onshore US. What we found is because of the unconventional plays, the US market's opened itself up to us. We've got large companies that aren't investing as heavily into conventional plays, which means the better quality prospects are becoming available to us without the high costs of getting into them. We've got a very experienced team in Houston, which is focused on bringing these projects to us. And we've got a very experienced team in Australia which reviews those projects directly with the generators as well as our team in Houston. Before we take any investment, everything has to return a profit to the company, somewhere between 5 and 12 times the money we're going to be investing risk-wise. We've had a bit of luck over the last 6 months. We've been involved in 3 discoveries. Our biggest one has been with La Posada. We had a net revenue interest of about 3%. We invested $1 million. We sold that interest prior to the well being tested, flow tested, for $7.5 million. We've got some very big operators in the US with large cash balances which are prepared to take us out, and we're not particularly in love with any prospect. Where I can make money, I'm going to make it. I'm going to take that money and reinvest it. Ibiza is our next discovery. It's going to be on production in December, and Degas and LeBlanc number 3 is currently producing about 217 barrels a day and 1.7 million cubic feet, which gives us a nice cash flow positive position. Very, very active drilling profile coming up. We've got 2 wells drilling right now. The first one's Lions Point. We're at 15,255 as of last night or this morning, and our first target's at 15.5. Turnkey project. The return to us is anywhere up to $15 million US. Grizzly, we actually just got into this project today. We looked at the project 3 months ago. It sold out very quickly. One of the partners is getting out. We had the opportunity to get in very quickly, and we took it. Wells down at 9,700 feet. First target's at 11.1, and once again, very large target. This is 100 Bs and 2 million barrels of condensate. Today we also announced another new project, which is Vermillion River. We've got a 7.83% working interest. The operators, one of the project joint venture partners, in fact 2 joint venture partners that were in with us on La Posada. It's very close to La Posada. It's about 8 miles away. Very big target for us, 110 to 185 BCF and 1 to 2 million barrels of condensate. West Klondike is due to spud in December, 2 million barrels and 6 Bs. And recently we also took an interest in Leduc Reef, which is a new one for us. It's a reef, and not many of them in the US, but we feel that this is a good opportunity available to us, and there's up to 12 million barrels potential there. We also have a majority working interest in a project called Napoleonville Field. The field has historically produced 180 Bs and 20 million barrels. Our project team was involved in generating a number of the prospects. One of those prospects was the Degas and LeBlanc field, which we're currently producing off. Relatively small team, very tightly controlled, very low operating costs and management costs. Charles Morgan's the executive director. He also holds 20% interest in the company. And I've got another major shareholder who holds 10. Macquarie Bank have just over 5. So collectively they've got 35%, which makes it quite easy to run the company. I think I have the pleasure of having the most number of shares on issue. That's actually 3.7 billion, not million. And we have a market cap of $18 million. As you can see, we're chasing our net. This slide shows the mid case of resource potential on our drilling program over the next 4 months. If everything goes well, there's north of 3 million barrels net to GGE. I'll run through each of these projects individually as we run through the slides. Current production, estimated production based on EBITDA's flow rates, we're expecting 115 barrels per day net to us after royalties. As I said, very active drilling program. Lions Point, drilling right now, as is Grizzly. EBITDA's completing its development. And West Klondike, Vermillion and Leduc expected to be spudded by the end of December. Very focused in primarily South Louisiana. As I said, the La Posada discovery is very close to Grizzly. We found that having a relatively small interest provides us with a lot of flexibility, particularly if we do want to exit on those projects. So each of these are very specific individual investments for us. Degas and LeBlanc number 3, it's generating about 180,000 per month net to us. Resource is estimated 400,000 barrels and 1.2 Bs. We've got up-dip potential of a further 10 to 15 BCF, and some of our joint venture partners have estimated the reserves north of 1 million barrels. EBITDA, let me see how. Our discovery was in this fault block over here. We intersected 9 separate pay sands, and we've been able to flow test the bottom 3. The operator is Clayton Williams. It's a relatively large US listed entity, and because of the wet location, we did a triple combo completion, so we can go in and produce each of those 3 intervals. Once they deplete, we'll move up to the next 3. The bottom 3 intervals are primarily gas condensate, and the 4th one up is primarily an oil-based reservoir, so we'll be most likely looking at doing a development well. And we were significantly higher than this field across the syncline, the field to the south. So the opportunity for us to move into the untested fault block to the north looks very promising. We've also got a lower pay sand beneath our lowest logged pay, which was still untested, and it's got about 400,000 barrels. So this prospect represents some significant upside for us. As I said, Lions Point, we're almost at our first primary objective. Very large project. This is also operated by Clayton Williams. Very, very easy operator to deal with. Great communication skills, very skilled engineering team. I've been an operator previously onshore US. I don't want to be an operator myself. I want the best guy to be the operator, and the best guy are the people that have those skills and have that engineering team that can drill these wells. As I said, Lions Point represents up to $15–16 million to us if it comes in. Grizzly, as we just announced today, we've taken a small position there. It also has potential upside around about $50 million for us if it comes through. Very significant flow rates, up to 15 million barrels of condensate and 50 million cubic feet of gas and 384 barrels of condensate. This is based on a discovery just about a mile south of our location. Vermillion River is another big project for us. It's got Walter Oil and Gas, which is a relatively large private onshore US company. Excellent seismic interpretation work that was done by the generators. Good net revenue interest through to us, and has one of the biggest significant upside potential for us. A lot of sand control in the region. As you can see, there's a huge amount of a lot of production in that particular region. Not a significant amount of production from the sands that we're chasing. But the nearest field to us is this Gross Isle up in the north, which has produced 70 Bs and 4.2 million barrels of condensate, which is a relatively high condensate yield and provides significant return to us if it comes through. West Klondike well's due to spud before the end of December. It's got between 2 to 4.8 million barrels of condensate and 6 to 17 BCF of gas. 5 different pay sands. The whole region's quite prolific, particularly in the Marge Tex, and which is our main objective. This is our location over here, and just to the east of us, there's a significant field that didn't have the same closure that we've got. As I mentioned, the Leduc Reef is our first venture into a reef. They're not very prolific in the US, but if they do come through, there's some very significant upside for us. And under this arrangement, we've got a pro rata right to participate in any other prospects that are generated out of this 3D survey. At Napoleonville, one of our development projects is called Desiree. We've got 52% interest. What we're targeting is a well which is up dip from a previous producer. It was the biggest producer in the Napoleonville field, generated 2.3 million barrels, and we're chasing 600 to 800,000 barrels, which will represent quite a significant return to our shareholders when it comes through. We're looking to drill that well early next year. So in summary, we've had a pretty successful year. It's 100% success rate on the wells that we've drilled. We've participated in 2 major onshore Gulf of Mexico discoveries, a relatively strong balance sheet, limited, very minimal debt, cash flow positive, very active drilling program, very aggressive and focused on returning funds to shareholders, and an experienced management team with controlling about 25% of the company's market cap. Little disclaimer, and that's it.